Hello and welcome to the latest Brunston Market Update. I'm Brian Morman, Chairman of Brunston Financial, and today I'm being joined once again by Mark Shields, who is the Investment Director at Brooks Macdonald. Just to remind yourselves, Brooks Macdonald have been carefully selected to manage the Brunston investment funds. In this video, Mark will be answering some topical questions and provide us with wider context as to what has been happening out there in the investment markets. Welcome, Mark, again. The investment markets, of course, never stand still. What information or events are likely to move markets in the near term?
You're absolutely right, Brian. Obviously, especially in times like this, we do tend to find that markets are quite driven by data releases and information that's being made public into the domain that then investors can analyze and react off of. So the main sort of things that we're seeing moving the market at the moment are some of the macroeconomic information, such as inflationary data, as well as comments and expectations from members of central banks, such as the Federal Reserve in the US. But also markets are moving quite a bit off the back of release from companies as well, so corporate information. And at the moment, we're just sort of coming into, or just at the start of, corporate earnings season in the US, when a lot of companies start to produce earnings and updates as to how their trading has been going. So these are the sort of things that are moving markets quite significantly at the moment and contributing quite a bit to short-term volatility.
You mentioned that the US has a significant impact and that we're moving on towards earnings season at the moment. How is that affected within our funds, Mark?
Yeah, I mean, it will have an impact on the portfolios, as it has quite a significant impact on the broader market as well. So, we obviously do have quite a bit of exposure to the US and US companies in the portfolios. It's probably our largest geographical exposure within the portfolios. And at the moment, we are seeing, obviously, those corporate earnings releases will continue to guide markets in the near term. In terms of how this season has gone so far, we're still quite near the beginning of corporate earnings season, but we've seen okay results from the banks, bit mixed, but not too bad. And as I'm talking to you now, we saw some of the first big tech releases last night. So the names of Microsoft and Alphabet, which were actually slightly ahead of expectations, but it's still quite early days. The earnings season goes on for another few weeks yet, and there's still some big names to report, and we could continue to see some volatility off the back of that, and impacts onto into portfolios, combined with some further significant macroeconomic data releases that are due over the next few weeks as well.
Of course, markets continue to be volatile. Recently the Sudan, Russia, China. Are you still comfortable with the longer term fundamentals of markets as they stand at the moment, Mark?
Yeah, we are. Our sort of view at this point in time is that the longer term fundamentals look reasonably compelling. Valuations in general are not stretched. And we have moved from an inflationary regime that is typically very difficult to invest into a more kind of productive inflationary regime, as it were, and we, against that sort of backdrop, we might see longer term returns begin to pick up a little bit. However, we are conscious of the fact that we may not necessarily be out of the woods yet, and we feel that the short term picture may be more mixed. We may see more volatility throughout the rest of 2023. We may see further market weakness at various points throughout 2023. So we've got to kind of try and balance those 2 points a little bit. But it is always worth reminding ourselves that over the longer term, markets do tend to absorb significant shocks. And at the moment, it's quite rare for markets to suffer from drawdowns of sort of 20-25%. That's what we saw last year. And if you can take advantage of those opportunities, then usually you can generate some decent longer term returns from that point in time. It's worth highlighting that the S&P in the US is still down 15% from its peak at the end of 2021, despite the recent market rally. So we don't think that the boat has left, as it were. We still think there are opportunities out there for a longer term investor to be focused on.
All right then, Mark. Well, thank you very much. That's our update at this moment in time. So thank you very much for watching. Thank you, Mark. And once again, if you have any questions or queries, please be in touch with us. Thank you.